Good morning, everybody. Looks like we had a 210 yield curve inversion yesterday. There's been a lot of talk about the euro having parity with the US dollar. That's a 1-to-1 on the ratio. It's not quite there. It's at like 102. And historically speaking, when we get below parity, I mean, it's been a long time, a couple decades. So you definitely want to keep track of that. Yesterday, it was tech that started everything out, and then finance came along behind it. Reading through the European market wrap, it didn't quite make it through the overnight hours. There's an energy council, an extraordinary energy council on the 26th of July. That's going to be really close to the Fed meeting. The end of this month is starting to rack up more and more for a catalyst event style situation. There was a pretty significant move in oil yesterday. It wasn't the biggest move that oil's ever had, but it certainly ranks pretty high up there in oil's history. Got below $100 a barrel. There's two arguments to this. One side, and I'm probably going to get the names wrong of the groups, but it just helps to put a name on it. So one side will say Goldman Sachs is claiming that the oil run is done and we're headed back down to like $68 a barrel. And the other side, we'll call them JP Morgan. They're calling for like 360 in oil by mid 2023. So two extremes. It's always worth looking at what the analysts are talking about. Actually getting beyond the headline, reading the article and seeing what it is that they measured, what it is that gave them their time frame, and why they believe that they are right. Preferably in a well-known company, not just, Bob's Mowing Tree Service and Analyst Recommendations website, right? That kind of junk isn't going to fly. Keep your eye on oil today. We do have some Fed speakers. We've got Williams at 9. These dates, you may notice I'm speaking a higher time frame than this. Is because these dates are in my time zone and we need market time zone, right? So it says 8, that means 9. So we've got the Fed Williams speaking at 9 o'clock. We've got JOLTS numbers today. This is basically take this job and shove it numbers, right? If you think about job scarcity or the idea that in a good, strong economy, you can pretty much go find a job whenever you want, right? And if you don't like the current job you're in for whatever reason, grass is always greener, that you're pretty comfortable with the idea of telling your boss to take this job and shove it somewhere and you'll just go get another job somewhere else. But in a very tight labor market, say if you remember what '07 felt like or '08 after the or during the housing crisis, jobs went away and there wasn't new jobs showing up and it was a difficult time, right? If you had one, you hung on to it with everything that you could. And that's what these numbers are kind of focused on. So the JOLTS numbers. We will be getting the FOMC minutes today. Remember that this meeting has already happened, right? This is the minutes from the meeting that has happened. But there are details that are in this that didn't show up during his speech after the meeting, right? They release their meeting and then they come out and they talk, right? And he has his presser. So like the meeting comes out at 2, he comes out at 2:30, chips his teeth for like 30 minutes or an hour. And then time goes by, they go back and they actually edit out and clean up and organize everything from that meeting, and then they publish that. Today we're getting that publication. So this isn't necessarily quote new information as much as it is clarification on the information that we already have. Who voted for what their expectations are, what data they're going to look at to help them make a decision about the rate hike coming up. And that's not just for July, it's also for September. So there's a lot of information in there that he may allude to or may have alluded to when he was speaking that day. But this will give us more clarity and flesh it out deeper. How close was the vote? Which one of those people were voting for what? And then what kind of data are they looking at? So just kind of keep that in mind, right? It is information that can greatly affect our market, but it's not like another Fed meeting, right? It's just clarification on the meeting that we already had. All right, so like we usually do, we come to Market Watch, take a look at what is on the agenda today. PMI, ISM, JOLTS, and the FOMC minutes, 9:45, 10, and 2. No auctions today, no additional auctions today, I should say. Yesterday, we had additional auctions, and right at 11:30, everything started to change. That's why we look at that stuff, right? Marked it out. You can see where the market absolutely, completely, totally shifted gears after that 11:30 auction yesterday. Things began to turn out a little differently in the weighted AD. And for those who know that I have indicators and I give out indicators and I've got a collection of indicators, I can't give this one out. So don't reach out and say, can I have that? No, not that one. Sorry. I don't give away indicators that are not open source. And this one's not open source. If I had made it, I would give it to you. But we had a significant change event right there, right on the dot. The weighted AD started ripping to the upside. We had the Russell expanding away from the group. Tick significantly crossed into the green and started to actually stay there. And then we had, the rally up, breaking through the RTH open and just an absolute run. Very beautiful, very sexy, exactly what it's supposed to do day. And if you think that it's really easy to look back and be able to call that, yep, it's even easier to do it when you've recognized what it's supposed to look like, right? Like yesterday, around 11:45, 11:30, I made the statement. This was starting to look a little bit like a half day wedge. The half day wedge is a particular trade out of my playbook. My playbook. Half day wedge trades are awesome. They're absolutely phenomenal. Posted it around 11:30 ish that we had the capacity for an afternoon trend day with a half day wedge breakout. So sure, it's always easy to look back, but it's important to grow the skill set that allows you to recognize it in a timely manner ahead of time. The before, right? Not the after. So these are sort of some of the things that we're looking at after the close yesterday, right? If you want to learn how to catch a day like yesterday, You have to go back and study it, learn to recognize the key characteristics of it before it happens so that you can actually trade with this your decision process. So we're just going back. We're looking at through the different indications that it was happening. And this was the 11:30 post that I had made at the time. The 5-minute intraday chart now showing a half-day wedge. Look for this compression to resolve because we can't stay here. And then all of the targets were met, by the way, which is always nice. Always nice when it just does exactly what it's supposed to do. We do still have a large caps room. We just changed the name around because people were saying, well, if this is the large caps room, where's the options room? So, we put the word option in it. Now it's just called stocks and options, but it's still a large caps, right? All right. So for today, the range is pretty clearly defined between 38.40 and 37.40. We've just been ping ponging back and forth. We are reigniting that interest in a topside breakout. Had a little micro double bottom or double top last night. No resolution at this point, but I would certainly look for this to be resolved at some point today. Keep in mind, you want to have a really good idea where your open is from the Globex. Just type in the word daily and Thinkorswim will give you what they call the daily open. For us, since we're looking at a futures chart, it's actually going to give you the Globex open, which is fine, right? We don't really need the RTH open at this point. We need the Globex open. So that white line, 38 to 38, is Globex open. We've come up and tagged that a couple times, even broke through it a couple times, but we really just haven't got anywhere. So we're looking for that to resolve. There's only three things that a market can do, right? We want to keep going back and reaffirming this. Base case says we just yet again maintain between 38.40 and 37.40. If you want to cut that range down to our current range, then it would be 38.50 to 38.10, right? We focus on our own Globex low, and our own Globex high, right? This micro range. And then, of course, you can put it into a different zone running all the way down to the RTH open of yesterday and the third zone running from that open down to the lowest point of yesterday. All three of these zones would still just be yesterday's range. It's just taking this very large range here and breaking it down into different quadrants so that you can approach each quadrant in its own trade. That big box that I just drew is the range, and it is the base case. That's what our expectation is for today, that we're just going to maintain this range. But that is a very large range. That's like saying, I think cars are going to be on the interstate today. Thanks. That's really helpful, right? That really kind of narrows it down a little bit. So this very large range doesn't really help us out much. You kind of break that down into these three quadrants, that helps out a lot more. We'll go beyond that. Focus on if we don't maintain the range, then what? For a topside breakout, we need to resolve the Globex open and then the Globex high at 38.48. We'll call it 38.49. It's close enough. We get above that, and we'll want to focus on the high of the previous day. Call it 38.58. So another 10 points higher. Then we've got half an ADR at 38.87, 38.88, right? We round that thing up. So another 30 points up and then 39.38. Since we're running an 8s, hey, why not? Along the way, we got a cog line at 39.11. We've got some higher level values. 39.50 is a weekly level. 3,900 is a daily level, but it's also a round number. So we got plenty of pivots to the upside to focus on. Taking it the other direction, if we were to get a downside breakout, recognize that the entire ADR is at 37.38, and it's not much lower than yesterday's lowest value, right? So we're talking about an inside day breakout below yesterday's low, which happens to be 37.44. Break through that, and we've got a structural level at 37.40, and we got the ADR at 37.38. Now, keep in mind, we're talking about an entire ADR move of 2.6% to get down to 37.38. And the ADR is a normal move. So if we start to get extreme and violent, we could very easily expand beyond an ADR. You don't want to take that ADR and add another 50% to it. So if it's 2.6, add another 1.3 on top of that. That would give us a 3.9% move on the day. If you get that far, you may as well just call it a 4% move, right? And measure out a 4% move. We're talking about extremes here, right? The ADR is normal. So getting down to 38, 37, 38, that would be a normal move. But if things were just to get a little crazy, we could very easily get down to 36.83. All right, so we are looking at the volume profile. Sorry, I'm on the wrong time frame. 10-day, 30 minutes. We use the 20-day 1 hour for swing trade logic, and the 10-day 30-minute for intraday logic. One thing worth noting is that the size of the value area is very narrow. It's very compressed. We've got an inordinate amount of volume all packed into this very small range. And you always want to be thinking about, where's my data coming from? Well, throughout the day today, these candles back here are going to drop off, right? And when we do that, we're going to lose a lot of this volume here. And so this volume profile will start to shift, and it will recognize more of this area up here. Just the way the indicator works, right? Each new 30-minute candle will knock a 30-minute candle off back here. The point of control is 37.72. We are inside the box and at the high of the box. When we are at the high of the box, we have every expectation of going down to the bottom of the box. Just like when we are at the bottom of the box, we expect to go to the top of the box. If we do begin moving towards the bottom of the box, we got to resolve the volume profile. There is a significant amount of resistance that we are tangled up in pretty much right over our head. It's the Globex itself where all of that volume happens to be tied in at, right? Between, say, 38.30, which is the value area high, 38.35-ish, right around in there, down to 38.20, maybe 38.22, something like that, right? So very tight range, lots of volume there, just tangled up in it. If we did get that topside breakout that we were talking about, it's a very shallow area. There's not a lot of volume resistance. So even marking out the pivot point from yesterday, that high, which, as we discussed yesterday, is like we would treat all of Monday as a Globex, right? Because it was a holiday, blah, blah, blah. Watch yesterday's replay to understand that better. So marking that pivot point at 38.56, that would be like marking a Globex high. right? 38.56 has no volume resistance there. So we would mark it because it's an institutional pivot point, but we wouldn't expect a lot of resistance at that location. Nothing is showing up on the volume profile for that. It's cool. We want to take and look at that just a little deeper. We get into the 5-day 5-minute, right? We call mapping out the 5x5. We again can come in and look at yesterday's price action. Look at that tip that we would be talking about. There's nothing there. There's no volume resistance at that location. So if we do get through our own Globex high and make that break and that push to the upside, we want to mark that pivot because we want to recognize that it's there. But I wouldn't give it a lot of weight, right? We should not expect that to be a significant area of resistance. We do have an untouched point of control now down here. We're not even close to moving in that direction this morning, so I'm not going to carry it forward yet, but it would make sense to do so. We carried forward this point of control from back here, this 37.82. And as you can see, when price came down, it interacted with that, right? So it's no longer an untouched point of control. We would take it off now, but that's exactly the kind of reaction that we would want to focus on, right? It didn't hold price. It didn't stop it. We didn't bounce there and turn around and run back the other way, but we absolutely interacted with that. It paused, consolidated. That's where we got our flag. And then from that, we dropped down to our next level. And then we buzzbeat off the bottom of it. Once we broke through, we came back up and tagged it. And if you didn't have such a line like that and price was just dropping and you're trying to figure out, should I be taking profit? I'm in this fall. It's doing what I thought it was going to do. And then suddenly it bounces and comes at you. And you don't understand why. Why did it bounce? What did it hit? Well, if you didn't have that marked, you wouldn't have known what it hit. Mm. All right. Significant move in oil we already talked about. The dollar has expanded beyond yesterday's range, which was already a just massive expansion. We're now above 107. Keep your eye on this. It's been hailed in the last few days as the safe haven. Like everybody's piling in there. Come on, it's the same thing as it was, a couple of days ago, a couple of weeks ago. It has been that same old sentence, and this isn't my phrase, but it really sums it up nicely. Our junk is better than their junk. What are you going to do? Buy the ruble? Nobody wants to buy their junk. What are you going to do? Buy the peso? Nobody wants to buy that junk, right? So, our junk is better than their junk. They're piling into the dollar. A lot of those institutional brokers or institutional trading firms or prop firms or put whatever grouping and label you want, a lot of them can't go to cash. They're going to take a severe penalty if they go to cash. How do you want to be the person who goes to your investors and your shareholders and tell them, well, I lost you X amount of money because I took you into cash? Not, well, I thought I was going to make a really good trade for you. I thought I was going to make you a lot of money. I took this kind of risk and I lost. Sorry, these are our losses. Instead, it was, well, I got scared, pulled my money out of the market, and these are your losses because I pulled your money out of the market. You really think that's going to fly? No. They got to put the money in the market. Where are they going to go? Into the dollar. Why? Because it's the safe, quote, safe haven. Nothing is safe, by the way. It's just the sentence and the phrase and the context of what they're using it for. Dollars bid. We're still above the 105. We've been talking about if the dollar gets above the 105, that is bearish for the rest of the market. Also notice that the dollar is decoupled from the VIX. We've been using the dollar as a fear gauge and as a risk gauge because the VIX has just been muted and not really doing its job, right? We did have a little bit of contango slippage the other day, right? We kind of ducked into backwardation momentarily and then came back into contango. But the VIX has been an absolute jerk all year, not helpful. And mostly it comes down to how VIX is developed without the trades happening to give it the readings that it needs. We don't see the thing move, right? Because it's not like the VIX is a real thing. It's a mathematical formula based on trading activity. And without that trading activity, that formula doesn't work. The VIX doesn't work, and it no longer becomes this tool or this gauge that we can use to accurately assess risk on and risk off situations. So we've been using the dollar for that. It is significantly now above the 105, continuing that push to the upside. And while the equities didn't just dump and crash, they certainly have not been able to advance yet. So if we're going to see this advance today, we need to see that dollar do what it did yesterday, which is pretty much stop running around and just hold still. It doesn't necessarily need to go back down, although that would be the expectation. Don't try to long the dollar now. It's already in an exaggerated move. But we're going to want to see this thing stop moving around just like it did yesterday, kind of hold the line, maybe ease off slightly to the downside. We really don't want to see it make a significant move down any more than we wanted to see it make a significant move up. So keep your eye on the dollar today. It needs to stabilize just like yesterday. Calm down, quit running around. If we're going to see a topside breakout in the NASDAQ and the S&P. We continue to use Bitcoin as a gauge for the same thing, risk on, risk off sentiment. We're not looking for parity. We're not looking for any kind of convexity. We're not saying that it's correlated or an uncorrelated market. All we're saying is Bitcoin is a very, very risky asset, right? It's like one of the highest ranking risk assets at this point. Pure speculation, 100%. Head to Vegas, free drinks kind of thing. So as a gauge for investor sentiment or risk on, risk off market behavior, if the Bitcoin is bid up, we're in a risk on market. If it isn't, we're in a risk off market. There's not an appetite for greater risk, right? That's all we're using it for. That move in gold yesterday was kind of freaky. I got to say, it did finally stabilize. And while it did set a few more lows after that aggressive peak, that aggressive wick, it pretty much stabilized. We want to see this continue to stabilize. I don't have the why behind it. There is some talk about the gold from Russia or gold having to do with Russia, right? Because there's these different stockpiles. This isn't the forum for it. And a lot of that is a little bit of rumor and innuendo, anyways, arguments between three of the major brokers about what this was. So, just recognize that that it has been, and that move wasn't reflected anywhere else. That's kind of the oddity of the whole thing. So we just want to keep our eye on that, see if it's going to maintain the stabilization, maybe even be considering what we could do with it, right? Like a mean reversion, least squared methods kind of thing. The 210, it continues to be the thing, right? The thing. So keep your eye on the bonds. If you're trading in the smalls exchange, you can trade the 210 in the smalls. You can trade that inversion. In their newsletter that came out the other day, they put together a 210, right? And it's a 1-to-1, so it's really simple. You don't have to get all confused about like a 1-3 ratio or anything like that. And then there is a small technology versus small crypto, and that is a 1-3. But just a couple of ideas to think about, right? It's in their small newsletter, like I said. I think it's kind of cool, right? To find something else to trade, since Apple and all of those are usually pressing against their lows and not a good buy for a like a put buy to take it lower, because I don't want to short from the lows. or they're running parabolic to the upside and I'm looking for a new place to take them short. And once I'm in it, I'm in it. I don't have anything else to do at that point. So having something else, especially something like this, trading the yield curve or, some pairs trade with crypto versus tech, I like it. I like having the expanded opportunity, right? We call it different levels of risk, more opportunities for risk. And it's a risk size that you don't need a massive capital to do, right? You're talking like 20 years ago, 5 years ago, if you wanted to trade the yield curve, you'd have been messing around with like, the ZB, the ZN, ZT. You would need a very large account to play around, and not now. These micros are the game changer. They have the dollar too, by the way. We were just talking about the dollar. The Smalls Exchange has the dollar, which is way better than UUP. Every time I trade UUP, I get assigned. Every single time I trade that thing in options, I get assigned. I get tired of getting assigned. I don't trade UUP anymore. But I do still trade the dollar. I just use the Smalls Exchange. So absolutely worth taking a look at, right? We're kind of sitting in a 50-50 uh, sector rotation this morning. It's about half and half. Half of our names are up, half of our names are down. Like I've said before, be very careful when you're looking at pre-market change percent, because if it read a print from last night, say 6:30 at night, and there hasn't been any trades in there this morning, it will still show you change percent from last night and not from this morning. So just be very careful, especially say, for an example, if you know that technology is up this morning, just for an example, and then you find a technology sector, say like cloud, that isn't up. Well, cloud's not a very liquid thing. So it may still have prints from last night, and you might think that it's down because it would be cloud being down when in reality everything was up this morning, right? So just be very careful about change percent in the pre-market, depending on what product you use, what broker. Almost every single one of them do this, and so you have to actually recognize where this information is coming from. 0.5% is my benchmark in the morning. So for an example, XLF is down 0.5%. That meets the criteria for me to consider that it actually is down. If you look at something like gold, it's only down 0.25%. I would just consider that to be flat this morning. Speaking of XLF, the S&P yesterday really struggled to turn around and join the game. It was a part of what I had wrote out yesterday, and I'm in my midday briefing, that the financials were kind of holding us back, and that we needed those to get into the game if we were going to see any kind of real rally in the S&P yesterday. And I like to use things like XLF and KRE. The financials are holding us back, and they need to maintain this soft sideways range or begin to rally. Any continued weakness in finance could stop the advances in the indexes. That's what I had posted yesterday. And like I said, it was about 11:30 or so when I posted it. So when you backtrack and look at where KRE or XLF was yesterday, KRE was certainly looking better. This is that half day wedge that we're talking about, straight out of my playbook. And around 11:30, if we kind of zoom in a little bit on the time when I had that post, it was right about in that time frame. So that's what we had. And we needed this to get into gear, or we weren't going to really get anything out of the S&P. All right. What we definitely didn't want it to do was try to retest these lows at around 57 and a quarter. It needed to really start to participate, get into the game. We got that higher low, and then we finally broke the range and took off. Remember that the NASDAQ 100 does not have financials in it. And XLF was a much uglier chart, right? It, it got there, but it's just much harder to read. So, it's useful to look at different tools, different markets. And if we look at the NASDAQ yesterday, it was already well along in that run. And that's because it was tech yesterday that was leading, and it was finance that was holding us back. Once finance got into the game, then you had multiple sectors of our risk on sectors that were making that bullish move. And that was the last catalyst, right? That was the last bit. That's when we started to get a high parity or a highly correlated market state, and everything really began to take off. Tech is down this morning. Finance is down this morning. Those are two of our key risk on sectors. So with those down, we need to see a turnaround. Remember that we do have FOMC minutes. We got the JOLTS numbers, right? We do got econ today. It's not like the highly anticipated econ that we've all been waiting for. We got that coming up on Friday, but it is more data. And we want to see how the market's going to take this data and project their fears on what they think the Fed is going to do, right? Are they going to start to price in a greater rate hike than the 75 basis points? Or are they going to start to unwind those 75 and maybe price us down to like a 50 basis point rate hike? That's what we're all going to be looking for. It is my day to stream. I will be streaming in the futures. I'll see you there at 9:15.